Ladies and gentlemen, good day and welcome to Sri Lotus Developers and Realty Limited Q1 FY26 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance in the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anand Pandit, Managing Director and Chairman of Sri Lotus Developers and Realty Limited. Thank you, and over to you, Mr. Pandit.
Good morning, everyone, and a very warm welcome to the maiden earnings call of Sri Lotus Developers and Realty Limited. Along with me today, I have our CEO, Mr. Sanjay Kumar Jain, our CFO, Mr. Rakesh Gupta, and our Investor Relations Advisors from SGA. To begin with, 6th August 2025 was a landmark day for us when we were listed on the NSE and BSE. Our IPO witnessed an overwhelming response, being subscribed over 74 times, with the QIB portion subscribed 175 times and more than 33 lakhs applicants, an extraordinary testament to the confidence the investor community has in our vision and business model. That day was not only a milestone, but also the beginning of a new chapter for all of us at Lotus as a listed entity. On behalf of the entire Lotus family, I extend my deepest gratitude to all our stakeholders, our investors, partners, customers, employees, bankers, and advisors for the trust and confidence you have placed in us. Since this is our first earnings call, I would like to take you through Sri Lotus Developers and Realty's journey so far and our strategies, followed by our operational and financial highlights for Q1 FY26. Post that, we will open the floor for Q&A. We have also uploaded our investor presentation on stock exchanges, and I hope everybody had a chance to go through the same. Sri Lotus Developers was incorporated in 2015, but our legacy in Mumbai real estate dates back much earlier, with various landmark projects situated in western suburb. These landmark developments established our brand credibility and reinforced our reputation for premium quality and timely delivery. During 2016 and 18, as we closely studied the changing dynamics brought about by DCPR 2034, which provided significantly higher FSI for land parcels across Mumbai, we foresaw that a large number of older societies would opt for redevelopment to consume such higher FSI. Hence, we pivoted towards redevelopment, a decision that has since defined our future direction by enabling us to adopt an asset-light and highly scalable business model. Today, more than 95% of our ongoing and upcoming projects are redevelopment or joint development. Our focus is on luxury and ultra-luxury residential and commercial developments, primarily in the western suburbs of Mumbai. What defines us is our philosophy. We are not just builders of projects. We are creators of products. Each of our developments is designed as a bespoke lifestyle product, which thoughtful layouts, premium finishes, sweeping blue water and garden views, that is B&G concept, in most residential projects, and world-class amenities. This product-centric approach has given us a distinct edge in the market. Our execution track record is one of the strongest in the industry, with projects consistently completed 12 to 18 months ahead of RERA timelines. Our sales velocity is also among the fastest, with close to a quarter of our sales coming from referrals without any advertising spends. This is the strongest endorsement of the trust our customers place in us. We have consistently commanded more than 20% premium over peers in our core markets. Importantly, we have never had a single RERA case or even RERA complaints against us on any of our projects, which is a history. From a financial standpoint, we maintain one of the strongest balance sheets in the industry. As of August 2025, we are net debt-free with net cash balance of rupees 905 crores. Till date, we have successfully completed 4 projects, 2 residential redevelopment projects in Juhu, namely Ananya and Ayana, and 2 commercial projects in Andheri West, namely Signature and Arc 1. Our pipeline today comprises 5 ongoing projects and 11 upcoming projects. Together, this translates into a portfolio of about 3 million square feet of carpet area, of which approximately 2.3 million square feet will be sellable. This is expected to deliver a gross development value in the range of 12,000 to 13,000 crore by FY30. Moving on to our strategies. 1. We are deeply entrenched in the western suburbs, a market where we understand customer needs and micro-market dynamics with great depth. This allows us to design products aligned with the demand. For example, Signature in Andheri, which is at the heart of Mumbai's media and entertainment hub, was designed with amenities such as private theatre, banquet halls, and a lounge, in addition to many other office amenities. At Arc 1, we recognize a gap in demand for smaller but high-quality commercial units and created offices to fill such gap while remaining all the amenities of a premium development. In Juhu, where land parcels are constrained, our projects Ananya and Ayana were designed with rooftop amenities including a pool, cabana, and sit-out spaces, whereby giving residents the feel of a gated community with lifestyle amenities despite limited ground area. Of our 11 upcoming projects, 8 are in the western suburbs, underlying our dominance and strong understanding of this micro market. The second pillar is expansion into new micro markets. While western suburb remains our stronghold, we are expanding into south central Mumbai with projects in Prabhadevi and Nepean Sea Road and other micro markets. These projects are designed with our B&G philosophy, which ensures a distinct premium positioning in this new geography as well. The third strategic pillar is our asset-light model. Out of our 5 ongoing projects and 11 upcoming projects, 15 are through redevelopment or joint development. This approach minimizes upfront land acquisition costs, enhances capital efficiency, and accelerates scalability. The fourth pillar is our integrated development model. Our in-house expertise across sales, construction, procurement, and business development provides superior control over design, quality, and timeline. Technology has also been a critical enabler. We are using 3D building information modeling for better coordination and cost efficiency. and virtual reality walkthrough for customer engagement. This combination of execution and customer centricity has yielded results. Our pre-sales capabilities are also proven. 87% of units in Ananya were sold before OC, 45% at Signature, 42% at Ananya, and 56% at Arc1. Our strong pre-sales performance ensures robust cash flows during construction, minimizes reliance on the debt, and enhances returns. Turning now to our financial performance, our Q1 FY26, we recorded revenue of 61 crores and profit after tax rupees 25 crores. Looking ahead, we have three important launches lined up by September 2025: the Arcadian in Juhu, Amalfi in Warsaw, and Varun in Bandra. The construction of this project is in full swing, and given the robust customer interest for these projects, we expect bookings for all these three projects to materialize thereafter. For FY26, we are targeting pre-sales of about 1,100 to 1,300 crores, revenue growth of about 75 to 85%, and PAT growth of 30 to 35%. As we embark on this exciting new journey, as a listed entity, we remain guided by the same principles that has brought us here: disciplined growth through redevelopment, selective expansion into newer micro markets, timely execution, and delivery of premium products that resonate with our customers. With a robust pipeline, a strong balance sheet, and supportive market fundamentals, we are confident of creating sustainable growth and long-term value for all our stakeholders. With that, I will now hand over our CEO, Mr. Sanjay Jain, to take you through the financial highlights in detail. Thank you.
Good morning. Thank you, Anand sir. Let me now take you through the project-wise and financial details of Q1 FY26. On the ongoing project, the Arcadian in Juhu, Amalfi in Warsaw, and Varun in Bandra. As Anand sir mentioned, construction activity is in full swing. The total saleable carpet area of these three projects, the Arcadian that is in Juhu, Amalfi that is in Warsaw, and Varun that is in Bandra Carter Road, is 2.2 lakh square feet with the estimated GDV of 1400 to 1500 crores. In addition, we plan to launch three more projects in this financial year: Lotus Aquaria, Lotus Trident, and Lotus Celestial, while remaining confident of completing large part of the sales of completed project, that is Ananya, Ayana, Arc1, and Signature. During the current financial year, the company has added 4 new projects. Development agreement were executed for 2 projects: Lotus Protifino in Warsaw and Lotus Sky Plaza that is in Andheri West, Oshiwara. While society at Lotus Avalon, Juhu, and Lotus Imperial at Bandra Carter Road have appointed Lotus as their developer. Moving to the consolidated financial for Q1 financial year 2026, revenue stood at INR 61.30 crores. Pre-sale stood at INR 61.30 crores. Collection for this quarter was 70 crores. EBITDA was 29.5 crores. EBITDA margin stood at 48%. Profit after tax was 25.80 crores. Expenses toward ongoing and upcoming projects stood at 47 crore in this quarter. During the IPO, we raised 792 crores through press issue, and net proceed post issue expenses was 732 crores. We have deployed total fund amounting to 88.70 crore till 22nd August. With this, I would like to open the floor for questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Ankit S. Mehta with Wellworth Share and Stock Broking Limited. Please go ahead.
Thank you for the opportunity, sir. So just had a couple of questions. The first question was on your PAT margin. So it is generally higher. It looks like that it's higher than the peers. So what is helping us to achieve those high margins?
There are a couple of things. First of all, we are net debt free, so we don't have any burden, unlike other players, of interest. Second, we do not have expenses towards marketing because our sale is happening through referral only, because it's company is customer centric. So till today, we have not spent any money on our marketing, that is advertisement, billboards, or social media marketing, or even we have never printed even our brochures. So we are saving significant money on that. Third is our fast execution. Because we are more like a product company, we execute our projects very fast compared to our peers and deliver them very fast. Because of that, our velocity of sales is very high. And fourth is our premium pricing. Because of this, our designs, which are meant for ultra luxury, we demand almost 20% more premium in all the micro markets. So this leads to good margins for us.
Okay. So the next question was that your projects are located in premium areas only. So going forward, what will be your views on selecting a new project going forward?
So I think last year we had average our revenue per square feet was between 40 to 60,000 rupees a square feet, which is quite decent, quite high. But looking forward, the way we have mounted our new projects, which are more on coastline, we are expecting that this per square feet revenue will go up. That's one. Second, we are, as I explained, we are going to open up some of the micro markets which are more high yielding for us. Like in Prabhadevi, we are starting a project, and Nepean Sea Road also, and some South Central Mumbai also, some other projects we are eyeing. So I think that per square feet revenue also we are expecting higher.
Okay. And so the last question was that we have been focusing mostly on redevelopment projects. So going forward, since the competition intensity is increasing in this segment, what is the outlook on the same, sir?
Can you repeat the question? Sorry, I could not hear that.
Yeah. So mostly your projects are basically the redevelopment projects. So considering that there is a lot of competition which is entering in this segment, how do you see the opportunities going forward?
First of all, in redevelopment project, I think we are we have got a lot of experience, first of all, and we have got first mover advantage. We have completed about 7 redevelopment projects. That's one. Second is, we have handed over all those projects in ultra luxury category. So in that category, I don't remember any other developer is there. So we don't see any much competition in that. And also our delivery track record is quite good, and that legacy, I think, will not have any issue for any competition at this point of time.
Yes. This will be all from my side, sir. Thank you so much and wish you good luck.
Thank you.
Thank you. Next question comes from the line of Mohit Surana with Monarch Networth Capital Limited. Please go ahead.
Sir, congratulations on the successful listing in a difficult market. I think Sri Lotus is among the few companies in today's market where growth prospects look really stellar, supported by a very strong balance sheet. On that point, I have a couple of questions, sir. On the redevelopment business, can you give us some insights on how the regulatory policies, costs, and the construction timeline differ relative to the greenfield development projects? I have one more question, so maybe I will ask once this is answered.
Yes. Mohit, as far as Mumbai is concerned, as we all know, that whole Mumbai is going for redevelopment drive completely. And that regulatory policies, particularly with the new DCPR, which recently in 2017-18, which came up, was very, very friendly for redevelopment. And government is recognizing that whatever issues are there regarding the policies or regulatory policies, time to time they are changing and making it more friendly towards redevelopment. As far as cost is concerned, yes, cost is increasing a little bit, but I think with our positioning, that's not a major concern. And as far as greenfield project is concerned, I think you asked me a question on greenfield projects.
Yes,
Greenfield project, the issue is that we have to come up with upfront capital. And second is little uncertainty about the legal aspect, since we have to clear the land and then get our plans approved and all permits in place. It takes almost 2 years, and you never know what will happen with that greenfield project. So, and when you are talking about redevelopment, then we are very less exposed to any legal issues because the building or society is already standing thereon. So that those legal issues are not there. And also, with the redevelopment, our capital employed is very, very minuscule. So that is the advantage.
Understood, sir. That makes sense, and that shows in your high margins as well. So my next question is with respect to the redevelopment housing market size in Mumbai. What, according to you, is the size of this market, and where would the ultra and ultra luxury segment would fit into, and what would be your market share in that segment?
As we explained right now, I do not have particular numbers of market share, but as I said in my speech, that we have got almost 11 projects in Western Suburb. That speaks the volume, I think. And overall market, with the one recent report, almost 30,000 buildings or societies are about to go for redevelopment in Mumbai MMR region. So the market is humongous, and we'll have enough market for ourselves.
Understood, sir. So just one last thing. In terms of scale, where do we see ourselves in terms of the annual pre-sales rate 3 years from now?
So Mohit, this is Sanjay Jain. So we are expecting annual growth 3 to 5x for next 3 years, and that will be overall growth of 3 to 5x.
Great, sir. Thank you. That answers my question, sir. I'll fall back into it.
Thank you.
Okay. Thank you, Mohit.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes on the line of Jay Shah with HDFC Securities. Please go ahead.
Hello. Am I audible?
Yes. Yes.
Hi, thank you for the opportunity. So I have a couple of questions. First is with respect to the launches that you are expecting for September month. So are there approvals that you have received, and also for the balance launches that are due for the H2 with respect to Prabhadevi, also and Andheri? So how is that placed?
So, the three launches, we have received the approvals more or less, and work is in full swing actually. And we are expecting that this will, as far as launch is concerned, by September, we'll be able to launch it. The remaining three, the approvals or permits, what we say, is in advanced stage, and we are hopeful that in a couple of months we'll get all three approvals, and we'll be able to start the work. As far as Prabhadevi is concerned, we have got in principle approval, so maybe within 1.5 months we'll be starting that work.
Okay. And these launches would be like any phased launches, or would be like you will open full building that you are planning to sell out?
So, Jayesh, what we do is little different than the typical real estate company. We don't straight away launch. As soon as we get our approval, we don't straight away launch. We see the market and how it's ripe. Depending on that, we will be launching that. But yes, what you are saying is correct. We'll be having those permission to launch it.
Okay. Also, on the demand side, so how do you see the demand for the segment that you are building in? And with respect to the cash reserves that you are having, any new micro market you would be planning to add post the 4 projects that you have added in this current year, which is one in Versova and Oshiwara, and then Ju and Bandra. The total of that GDV, I guess, is around 2,000 to 2,100 crores. Suppose that, are you like eyeing any other micro market or any BD in this year?
Yes. In fact, this financial year, we have added 4 new projects already. And as I said in my opening speech, we are going to start and open up new micro markets, definitely. And all these micro markets would be more high-yielding micro markets. So balance sheet will become more and more stronger. As far as this year is concerned, as I explained, we have got 3 projects will be immediately launched. Another 3 in this year, so total 6. And after this financial year, next year also we have locked in about 7 to 8 projects already in pipeline. So very, very strong pipeline. And considering this both means 6 this year and 7 to 8 next year, is almost GDP is about 12 to 13,000 crores.
Okay, just on the BD that you have added in this year, which is in Versova and Oshiwara. So can you provide me the GDV of each project that you have added, the 4 projects?
So, yes.
Yeah, Sanjay Jain here. So these all 4 projects we added, so estimated GDV is approximate 3,700 to 4,000 crore is there.
3,700 to 4,000. Okay.
Yeah.
Okay. And lastly, so just wanted to know the timelines for these projects that you have added, which it will be around in FY27 or in FY20. Okay, so all the projects that you have added in this year will be due for FY27.
So, including these 4 projects and 3-4 projects which we have acquired last year, so all 7 to 8 projects we are launching next year. So the financial year 27-28 we will launch these 7 to 8 projects.
Okay, because like your peers had faced many clearance issues with respect to NGT. Now the Supreme Court has currently given like permit to the state government to provide the clearance and to provide the approvals. So how optimistic are you with respect to that and with respect to the approvals that you are eyeing for? Because many launches that the developer were planning had delayed because of these approval issues. So how do you see this?
I think now it has been cleared by Supreme Court. So I feel that everyone, and not only us, but all the developers who had that backlog, that will be cleared very soon. So I don't see any reason now.
Okay. Okay.
Thank you. Next
Thank
question
you.
comes from the line of Ritvik Seth with One Up Finance. Please go ahead.
Hi. Good morning, sir. Sir, just a couple of questions. Firstly, sir, you mentioned that we are looking to launch 6 projects in FY26 with 3 in September itself. So for the other 3, what is the total GDV?
Yeah, just a minute. I will give you the GDV.
So we are launching these 3 projects and other 3 projects. Total 6 projects we are launching, and the current year pre-sale from this is around 750 to 850, and the GDV is approximately 2,000 crore for the year.
For that 3
projects, separate new projects.
Okay, so total GDV of all these 6 projects will be 3,500 crores approximately.
Approximately, yes.
Right. Okay. And out of this, 750 to 850 is the targeted pre-sales.
Yes, during this year.
Got it. Okay, sure. And sir, you have also mentioned that for the 3 projects that we are launching in September, you have started construction. So, sir, can you give us a sense of what is the total investments that have gone in these 3 projects till date, right from, from DA till, say, June 2025?
So, yeah, total investment is for all these 3 projects is already we have incurred 165 crore.
Okay, cumulatively.
Cumulatively.
Okay, sure. Okay. And sir, again on business development, someone asked earlier on the call, but just to get a sense, we have already acquired projects worth 4,000 crores. So what is the target for current year and next year?
For business development?
Yeah, to acquire new projects.
Yeah, I mean, see, this is like every time we get more and more new opportunity. But as far as our pipeline is concerned for this year, next year, we have enough projects. But we'll be looking for some good projects. As I said, this year also, this financial year also, we locked in 4 projects. And there are many number of projects which are in talks or tender level. So we are hopeful that another, 4 or 5 projects will be able to get it in this year.
Okay, got it. And so this 900 crores of cash, what can be the approximate number of projects that you could acquire with this in terms of GDV, assuming all are redevelopment projects?
So normally what happens in the redevelopment, our investment is 10 to 15% of the revenue. So typically, if we see that our net worth as on 31st March 2025 is at 932 crore, then the 732 crore net IPO proceed added, and this year profit will be added. So it will be roughly around 1,800 to 1,900 crore. So that will be give the say around 10,000 to 12,000 crores project of the GDV we can easily execute.
Got it. And just one last question from my end. So you mentioned growth of 3 to 5x in the next 3 years. So this would be for pre-sales?
We are following the percentage completion method. So in our case, normally what happens, the pre-sale and the revenue, the difference will be not 10 to 15%, is always 10 to 15%. So the both figure will be same, and our project cycle is less than 4 years. So normally 3 and to 4 years, we will recognize the we are able to sell the project. So you can consider the both pre-sale and the revenue.
Okay. Okay. Great, sir. Thank you and all the best, sir.
Thank you.
Thank you. Next question comes on the line of Abhisar Jain with Monarch AIF. Please go ahead.
Yeah. Hi. Good morning, Mr. Pandit. My question is on your asset-light model, which is, I think, quite commendable how we have scaled it up to this level. So just wanted to understand that what are the key enablers for success for you in this space? What the value addition you bring to these societies who then kind of partner with us and give us the chance to execute these projects in some of the key and best locations. So if you can just throw some light of how do we do and what we do differently here, which helps us execute on this strategy, it will be great.
Sure. Abhisar, what we do differently is we treat them as our partners. The societies, we treat them as partners. And we don't treat them as old tenants. We treat them as our first clients in that project. That's number one. So that respectability we give to them. Second, there is no differentiation between old members' apartments and new members' apartment or sale apartments. Absolutely, there is zero differentiation. So they are absolutely at par. So which is what they like. And third, we execute this project like a greenfield project in the manner like what we would do for greenfield. And again, we don't consider this redevelopment as redevelopment, but we consider that as a development project. And we try to complete those projects as ultra-luxury project, even though it is a redevelopment project. So this is how we have become very successful, and our societies particularly like this attitude. Also, when it comes to society, we have got extraordinary experience. Our experience in redeveloping in ultra-luxury is very, very unique. Third, our customer base is also very unique, and that is what they like. Fourth is kind of apartments we give them fully loaded and unparalleled amenities what we provide to them. That is what they like. Our track record of execution and handover with OC is extremely good, and that is also again they like. So this is how we differentiate ourselves from the clutter.
Understood, sir. And sir, in terms of approaching these kind of societies for the future such projects, is there a dedicated team or a separate effort which you make to find out these societies, or has it become now a case where even the societies approach us directly?
So generally now, since we have made our brand in redevelopment, ultra-luxury developer, we get invitation. And all the societies, who wants to redevelop, they think about Lotus as one of the partners. So we get invitations.
Understood. That's quite good, sir. Secondly, sir, I wanted to get your sense on the demand side. There have been, different kind of reports in terms of how the demand might now be shaping up. But it'd be good to get your views of what you are getting from the ground on demand, and also in some of your ongoing projects or completed projects, whatever inventories that you have in hand, how are you feeling about that? Are you deploying any strategies to fast-track the liquidation of those, or you're very comfortable on the demand? We put to know from you.
The demand is, I would say, for our kind of product, demand is constantly going up because everyone wants to move from lower strata of the pyramid to above strata of pyramid. People who were living in just ordinary building, they want to go for ultra luxury only. So ultra luxury and luxury, those products are becoming very popular, and everyone aspire for go for that. So being in that niche player in ultra luxury, I think we don't have any issues of any slowdown or maybe in future slowdown. So we are very confident about it.
Understood, sir. Thank you so much, and best wishes from my side.
Thank you.
Thank you. Next question comes from the line of Taha with Tara Capital. Please go ahead. Mr. Taha, please go ahead with the question.
Yeah. Am I audible?
Yes.
Hello. Yeah. So, congratulations on listing, on exchange listing. So I have a couple of questions. First is, if I look at your pre-sale target for FY26, it's around 1,100 to 1,300 crores. But in quarter one, you have like 61 crores. So it's quite less as if we divide this number into four. So how are you gonna achieve this 1,100 to 1,300 crores, and why is the pre-sale number is so less in quarter one?
So Taha, yes, Q1 revenue and PAT are modest when we look it as in isolation. But this is the nature of real estate cycle. Quarterly revenue recognized depends on project milestones. And as we all know, this is not like any FMCG or IT. But yes, we can explain you.
So this is Sanjay Jain. So from this financial year, the percentage of the pre-sale come from the completed project from either around 25%, and the balance because of the three new launch that will contribute around 750 to 850 crores for that. And three more new projects will be on the second half of the financial year. So that will contribute around 100 to 150 crores. So because of the not launch of these six projects, so the major part of the revenue is coming in the later part of the financial year.
Okay. Got it. So there wasn't any launch in quarter one. That is what you're saying, right?
Yes.
And the pre-sale got it. Okay, got it. And my second question is, can you elaborate what is the inventory level we have on our launch project so far?
So approximate 200 crores inventory in the books we have that for the already completed project.
Okay, which are majorly Ananya and Haya, you said, right?
Ananya and ARC1, and we are getting good response during this financial year because in the ARC1 we got the OC in the March. So after OC, normally in the commercial sale is increasing.
Okay, got it. Okay, thank you for the response.
Thank you.
Thank you. Next question comes from the line of Sanjay Kular with ACME Investments. Please go ahead.
First of all, compliments to you, Anand Bhai, for delivering good results in the given circumstances. And my question pertains to Shah Rukh Khan, whose apartment also you are redeveloping apparently in Bandra, and you are projecting about 2,000 crore plus revenue in the project. Can you please elaborate on it, and when do you expect to complete that project?
Very recently, we have got into that project. It's a
Okay.
project in Bandra on Carter Road, right on the bank on the ocean.
Okay.
It's a little more than 1 acre land parcel. And GDP would be about 1,700, approximately 1,700 crore.
Okay.
And
That is not been yet announced by the company as such. I mean, that's not included in the current GDV or whatever we count right now.
yeah, this is this year's acquisition, this
Okay.
financial year's acquisition. And
Okay.
we are
Okay.
hopeful to start and commence that project next year, because a lot of paperwork has to be done.
Okay. Okay. And sir, back of envelope suggests that, you are going to be a five-bagger company. This will be a 50,000 crore market cap company in the next 3 to 5 years, because we will achieve probably 5,000, 6,000 crore sales and a profit about 2,500 crores. That means multiple of, if you look at in comparison with the peers, we are definitely going to be 50,000 crore company in the next 3 to 5 years. Thank you very much. Bye-bye.
Thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Mohit Surana with Monarch Network Capital Limited. Please go ahead.
Sir, I wanted to have an understanding of your commercial development in relation to the residential development. So what kind of margins do we make? Is it similar or commercial is on the higher side?
So Mohit, this is Sanjay Jain. So normally we are doing now the commercial redevelopment is also in the redevelopment phase. So only one greenfield project is the commercial, and we are expecting the same line of the margin as a residential.
Understood, sir. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
We thank you everyone for joining the call today. We hope we have been able to give you a detailed overview of our business and also answer your queries. As you know, this is the very first time we are doing such a call, and our idea is to start a structured way of communicating and sharing updates. The purpose is simple: to create more transparency, build strong engagement, and ensure that everyone is aligned with the progress and future direction. For any further queries or questions, please feel free to reach out to SGA, our investor relation advisor. Thank you once again, and have a good day.
Thank you. On behalf of Sri Lotus Developers and Realty Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.